Hello everyone, welcome. Thanks for joining. In this video, I'm going over Meridian Bioscience, stock symbol Vivo. Meridian Bioscience is in the diagnostic space, and with diagnostic testing continuing to move towards point-of-care testing in most advanced healthcare systems, it is worthwhile explaining what this is. As defined by the MHRA, simply put, point-of-care testing is when you're performing analytical tests such as blood gas analyzers or urine dipsticks at the point of care without needing to send samples to the lab and then waiting for the results to be sent back. With point of care testing, you'll be getting rapid results in minutes instead of hours. So let's explore how Meridian, whose largest source of revenues is clinical diagnostic products, is morphing in this space. As usual, there's a lot to cover in this episode, so let's break down our key areas of interest. I like to keep it simple and cover these 5 points to help us decide whether the company demonstrates qualities needed for long-term shareholder value. Firstly, a brief look at the company. Is it a simple business model that is easy to understand, and are they in a growing niche or industry? Do they have an economic moat? So here we're looking for a durable competitive advantage that enables the company to be profitable long-term. Next, does their current technology and product range provide long-term value to society? For example, do their core products address chronic conditions that plague society? And then we'll move on to the management team. Here we're looking for a melting pot of complementary skill sets, and these skills should be aligned with the company's goals. You also need your management team to uphold corporate governance, to be accountable, be honest about finances and problems at the earliest opportunity. And then lastly, we'll take a look at core number performance. These are the areas I find most useful at helping me gauge good long-term performance. This video is a result of a lot of research, so I hope you find it helpful. And if you'd like more of such videos, please do like and subscribe so I can gauge what type of content to produce more of. As always, leave comments below what your thoughts are on Meridian. Do you already hold a position, or are you watching on the sidelines waiting for an opportunity to enter? Make sure to watch all the way through to get my opinion on where it's headed. Let's jump right in. Who are Meridian Bioscience and what do they make? Meridian manufacture diagnostic test kits, bulk antigens and antibodies, and bioresearch reagents. Meridian is very different to a company like Theranos, as they have commercialized their products across the globe and crucially have gained appropriate regulatory certification along the way. Their portfolio includes over 140 diagnostic tests and transport media and can be roughly grouped in 4 families: GI assays, respiratory assays, blood chemistry assays, and other assays. The medical diagnostic industry is estimated to be worth billions worldwide. When you combine the rising burden of chronic diseases and the need for faster and accurate decision-making solutions, it is no wonder why most analysts consider the sector to continue on an upward trajectory. What sets Meridian apart from the rest? Bear in mind, in this sector they have some well-established players they have to fend off, including Danaher, Siemens, and Abbott. These players have far deeper pockets and resources in comparison to Meridian. From my findings in this section, Meridian does not inspire me with confidence. Quite frankly, the list goes on, starting with expiring patents, which is inviting more competition and reducing their profitability on their current products. They are in a sector which is fast moving and requires vast amounts of investment in R&D, up against multinational corporations that have even deeper pockets. Ongoing suspension of dividend repayments from 2019. They are in EU markets where government-sponsored healthcare systems look to deliver the best care at the lowest possible cost. And due to the economics of scale, bigger companies would prove tough to match on affordability. When you take a look at the stock price performance and put it against what we've just discussed before, it doesn't seem to add up. We're going to touch on this when we dive into the core numbers performance. As for value to society, they are absolutely in the right business. We are after faster, more efficient, and more reliable tools to assist in clinical decisions. Already, we are looking beyond this in exploring the use of implants and AI to provide even more personal and predictive healthcare. Unfortunately for Meridian, there's so many other players who are also in this sector with little differentiation. And with the improvements in artificial intelligence and the push to keep patients out of hospitals, there are new entrants in this field from traditionally non-medical businesses such as Apple and Alphabet. So overall, Meridian does not seem to have a compelling economic advantage. Now, as for the management, I was not able to find any concerning issues regarding poor corporate governance. The team has been working together for years, and as we will see in the core numbers, they've had some respectable figures, especially in the last few financial quarters. So there are no concerning share dealing activities either, so nothing significant on this part. Why is insider dealing important? Well, in my view, these individuals typically have better insight into a company's nuances and projected performance. As the saying goes, actions speak louder than words. Management team can say all they like why their stock is a buy. However, the actions of a company's insiders can tell a different story about the company's investment prospects. What we are interested in here is a major trend in buying or selling by corporate insiders to provide insights into the future of the markets. Now let's take a look at the numbers. So how has this business trended over the last few years? This will give us a general sense of the trend in a number of different market conditions. Whilst the share price alone isn't at all that insightful, I find it interesting when compared to the industry average. What you're looking at here is the 10-year layered chart showing the percentage increase or decrease in stock price. The orange line resembles the average of the pharma and biotech industry, and the blue line is Meridian Bioscience. From 2010 to 2013, Meridian Bioscience was largely correlated to the industry average performance. And then after about 2013, Meridian experienced a sharp decline in their share price and has only recently recovered. So how consistent has the business growth been over time, if there's been any growth at all? I get my raw data from the annual reports. However, for visualization, I like using this site as it's easy to identify the trends when you do what they refer to as horizontal analysis, which is basically comparing the same figure over 2 or more periods. I like to look at it from 5 to 10 years to just give me a better understanding of its performance over that time. So starting with the income statement, Meridian has steadily grown their revenue from 2016 to 2018, and net income over the years hasn't followed quite the same trend. The profit margin is steadily climbing again after a sharp drop between 2016 and 2017 of roughly 50%. Their debt to asset ratio is in line with industry average. This metric is useful in assessing whether the company's financial risk profile is improving or deteriorating. For example, an increasing trend indicates that a business is unwilling or unable to pay down its debt, which could indicate a default in the future. Operating cash flow includes any cash spent or generated from the company's products. This has largely been stagnant over the 4 years. Negative cash flow from investing activities shows the cash spent relating to investment activities. In this case, from reading the annual report, we know this is due to investment in the long-term health of the company. Financing cash flow is cash flow generated or spent on financing activities involved in funding the company's operations. In 2019, you can visualize the effects of not paying out dividends. Lastly, to touch on the recent strong performances, Meridian has seen strong revenue growth thanks to global ramping up in virus testing due to the pandemic. With a vaccine not in sight yet, Meridian looks primed to continue to benefit through the use of their diagnostic tools such as the COVID-19 antigen assay from saliva. So to wrap it up, the short to mid-term outlook looks very strong with a few questions of a long-term strategy. With that said, that's it for this video. Thank you guys for watching this video. If you like this video, make sure to smash that like button and subscribe to my channel if you'd like to see more videos just like this. I will see you guys in the next video.